All right. So today we had the CPI data and SPY was down 0.61%. And even before we knew the CPI data, it was very clear there was a high probability that today was going to be a pullback, which is very evident by yesterday's video. And I even put it in the thumbnail that from resistance, we were likely due for a pullback. So tonight I'll do a quick lesson on how I knew this, and I'll show you exactly how you could have stacked the odds in your favor. And that is exactly what we did on the Stocks Channel Discord today, because it was a very clear low risk short trade, meaning that even if we were wrong, we were only going to lose a small amount for the potential to make a decent amount. Remember what I always teach you about stacking the odds in your favor and getting those great risk reward ratios, which is the same thing we did when we went long at SPY 420. So how I knew it was a great short trade today is, first of all, SPY was at this critical resistance right here at 436, knowing that even if we went a little bit higher, we were likely just going to fill that gap and then start to invite sellers. And then in parallel, if you look at the triple Qs, we hit the downtrending trend line, which is defining the current downtrend of lower highs and lower lows, which was that resistance just above 373.6. So when you combine a low risk short entry on SPY with the low risk short entry that we had on the triple Qs, I will take that trade 10 times out of 10, knowing that we had very low probability to lose a lot of money sitting at critical resistance on both major indices. And if you look at the triple Qs, we were also near the upper Bollinger Band. So when you're in a downtrend, you can comfortably short at very critical resistance levels. And when you hit critical resistance on the triple Qs and SPY in the same day, that is only increasing your probabilities. And then likewise, if we go back to SPY and we turn this on the hourly chart, you can also see that we had that double top rejection from the high. And then we came down here and broke down below the neckline. And you can probably see all we did intraday is bounce back up to test the neckline, which means there's still the chance we get rejected and go hit the full price target of this double top. So going into tomorrow, even though we did start to bounce intraday, we still have this double top that could still resolve into lower prices. So don't be surprised if the bears continue to short and the bulls continue to lock their profits, which is exactly what I've been telling you I wanted to see on SPY. Is eventually I wanted to get a pullback into a higher low and then get confirmation of a higher high breakout as we start to go higher to fill these gaps above. So you can already see how this is all playing into motion and how we are using this strategy to develop a trade plan for low risk entries in both the long direction from SPY 420 and now shorting from this level just below 438. Remember, we're traders, so we don't care what direction the market is moving. We simply want to be on the right side of the trade, and that is why today we chose to take the short trade. It doesn't matter whether you went short or long, as long as you're making money and managing your risk, you're going to do just fine. But I do suggest you practice setting up those low risk entries, because that way, even if you only win half of your trades, you're still going to be profitable. When you get low risk and high reward, you don't need a high win percent. So even if you're not a great trader, as long as you're a great risk manager, you are still going to be profitable. And that is why I always say some of the best traders are actually just really good at managing risk. If you go win 100 trades and then the single loss wipes out all 100 trades, you are a horrible risk manager and therefore you're going to be a horrible trader. Let your wins be way larger than your losses and practice doing this over and over until you perfect it, because trading is very emotional, especially if you don't have a plan. So always going to your trading day with a plan. All right, so on SPY, we're still looking for this critical resistance between 436 and that gap fill at 438, knowing that eventually we will need to see a higher low to confirm we're out of the downtrend. And keep in mind, there's no guarantee that we are out of the downtrend, and there's always the chance we get another lower high into another lower low. However, I significantly don't expect to continue the downtrend. I think we are still in a bull market. Barring any black swan events, I do expect to see us resolving this into higher prices, which is why I've been telling you from 420, there's a great chance we are going to 460. That does not mean I'm going to be correct, but I've given you all of the critical levels to manage your risk from. And on SPY, I still believe a great risk level is going to be this level right here at 430. And if we break 430, there's a very good chance we could come back down towards 420 and possibly get a retest of the low. On the NASDAQ 100 triple Qs, we were down 0.35% today, and the triple Qs tried to get the second day in a row back over 370. But as you can see, hitting that resistance on the downtrending line was too much selling pressure, and we closed just a hair below it. But if you look at the moving averages, price is still above all the moving averages. So if we do continue this pullback, as long as we can hold above this 20 daily moving average and then turn the corner and continue higher, you're going to see all of these moving averages start to stack to favor the bull trend yet again. And that is going to give us confirmation we are likely out of this correction and continuing the bull run. As you know, this is the scenario that I prefer, but it does not guarantee I'm going to be correct. So the critical risk level is going to be between 360 and 362, or wherever that 20 daily moving average is, assuming it does turn the corner and start to slope positively. So if there's anything you should be taking away, it's manage your risk at these critical levels, knowing we are still below the downtrending trend line, and we really need to see that breaking if we're going to continue to get bullish. That is why we chose the short trade today, and that is why we're taking the best risk reward ratios, which is currently the short trade. And that will change if we get a higher low pullback into a higher high. It is going to be a buy the dip bull market yet again. On the Dow Jones, we were down 0.52% today, and yesterday I said I want to see that higher low pullback, and I want to see that higher low pullback resolve into a higher high, and today you can clearly see we are getting the pullback. It's now just a matter of whether or not we're going to get the higher low into the higher high and head higher to fill that gap above 344. If we start to break all of these downtrends, which are very evident by the chart that we have not broken the downtrends, then we can get a lot more bullish. So right now we're just trading the range, shorting at resistances and going long at supports, respecting proper risk management. On the Dow, we need to watch 336 as support, and if that fails, we could come down towards 331. And if we break all of that support, we do have another gap to fill down there at 322. So it's always possible we are still in a downtrend. So don't get overly sold on either idea. Be aware of both scenarios and then play the range around these critical levels. The next critical resistance is going to be up here at 341. On the Russell 2000 IWM ETF, we had a bloodbath today, going down 2.26% with another rejection from the negatively sloping 20 daily moving average, which is why I always tell you it's so important to respect the trend, because this is a downtrend. So when we get a bounce back to the resistance levels, we're looking for low risk short trades, and that's exactly what a lot of traders did today. But more importantly, if you look at the volume, this was really just a buyer strike. This isn't really high volume selling that you would expect to see on a day you go down over 2.2%. Now, overall, I think that means this is going to be bullish. When you don't get high volume selling, it's usually going to be a bear trap. So in my opinion, this could be an opportunity to get a low risk entry from 170, knowing that if you break below 170, you need to take that small loss as we head lower to 164. From here, I think there's a great chance we can double bottom and then go up there to fill that gap. So I am pretty bullish on the small caps, even though it is a contrarian view. I do believe we will bounce from this zone and go fill that gap below 180. On the ARKK ETF, we were down 3.56% today, which is exactly what we were expecting to see, was a rejection from resistance and then come down here and fill this gap at 36. And I really don't see any reason to believe that won't be the case unless we start to see an uptrend of higher lows and higher highs, which is going to require that break of resistance at 41.3. On the VIX, we're up 3.73% today, and the VIX is really just churning around here as we decide if we're going to see the VIX crushing back down as we go into a bull trend or spiking out above 20 as we continue into a bear trend. On Bitcoin, we're currently down 0.5%, and Bitcoin is risk off while it's below 27,000, and I do think there's a good chance below 27,000 we could come back down to retest 25,000. At this point, I would wait to get bullish until we can break this resistance and confirm the bottom is in, and that critical resistance is still above 28,000. On Tesla stock, we were down 1.57% today, and Tesla is getting that pullback into this support at 255. And remember, this is going to be risk off if we break below 255, because it means we're likely coming back down to the 240s or 230. If we can bounce from 255 and break this high at 264, look for the next resistance at 274 and then the gap fill below 290. On Apple stock, we were up 0.51% today, and yesterday I drew out the path that I thought there was a good chance we would go higher now that we had the break above 179 to fill this gap just below 182. And then from that resistance, I am expecting a pullback into a higher low before we head higher to fill the gap below 191. So remember, this is just an idea. There's no guarantee it's going to happen the way I have it drawn. So watch that critical resistance right around 182. And if we start to get a rejection from there, it is possible we pull back down towards 174 to 175 before we go any higher. So jumping back over to the S&P 500, today was a very good trading day as long as you had no bias and recognized that the indices were at very good risk levels for short trades, knowing that they were critical resistance levels across the board and that we are still in a downtrend. Now, I do believe this downtrend will be over very soon, and I think after the month of October, we're going to see a return of a very powerful bull trend, but that is just an idea. We need the price action to confirm it, which means we need to get that higher low pullback into the higher high that I've been talking about, and nothing will tell us that we have it except the price action, so we need to wait for confirmation. While we wait for that confirmation, we're going to trade like there's no tomorrow, meaning that you can still take advantages of intraday volatility from resistance and support. There's no reason you need to just sit on the sideline and do nothing when we're getting great risk-reward entries. This is exactly what we do each and every day on the Stocks Channel Discord server. We are absolutely crushing this market on the Stocks Channel Discord and Bang Trade Alerts, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.